Welcome to the HyperPod. Today we have Haf, the founder of Pear Protocol. Good to have you.
GM, it's good to be here, man.
Yeah. How are you feeling about the market at the moment? I mean, Hype just crossed $30. Do you think it's frothy? Do you think we're just getting started? Or where's your head at?
I think we have lots of factors, right? Like you have a Bitcoin all-time high break. So first of all, and that's like, it's not just like a spike, it's kind of gone above and sitting above. Plus there's a narrative for Bitcoin, especially with like Bitcoin treasuries and a little bit of a demise of dollar playing out. Then within Hyperliquid itself, you've got much more mind share coming to Hyperliquid, whether it was what took place with the Bloomberg interview, whether it was the $1 billion perps position, which we can talk about, whether the fact that people are underallocated generally, if they're not already within the Hyperliquid ecosystem. And so I think like looking at Bitcoin and looking at Hype, the two assets that I care about the most, I think we're in a place where you can have a sustainable leg up from here. So I wouldn't be fading this position.
Yeah, 100%. So tell us a bit more about like your story. I know you've been around for quite a while. I think you're a very experienced market participant. So maybe take us a little bit back to, how you first came into crypto and then your journey, to finding out about Hyperliquid. And then we can chat a little bit more about how Pear Protocol is actually going to use Hyperliquid going forward.
100%. So I'll start off by saying I'm a trader by background. So I worked for an investment bank in London. I was on the trading floor there for the first part of my career. So the first 10 years, I was in the city in London on an equity derivatives desk. And so you can imagine what my kind of world looked like back then. And that was great to learn about market structure, to learn about options and options pricing, and to learn about some of the major participants when it comes to financial markets. So what do the hedge funds do? What do asset managers do? What do pension funds do? What do the investment banks do, etc. I then got really kind of tired of that. By the time I turned kind of 30. So I actually took like an early retirement of sorts, became a maths teacher. Kind of love just the concept of educating and teaching math. Yeah,
like
man.
High school or like what level?
11 to 18-year-olds. So everyone thought I'd gone kind of crazy. And certainly like pay cut wise, it was, right? Like you're doing something which, as much as you love like the content and you love being in like a school environment and teaching and things, you realize that like people are building stuff in the world, right? And once you have this kind of mindset towards financial markets and towards tech, it's really hard to like just sit in a classroom and teach. And so I was drawn back into crypto with DeFi Summer in 2021, was just like supplementing my income, doing some farming and things. That then expanded out, ended up working for a farming as a service kind of protocol. So doing yield management on chain. And on the back of that, ended up actually managing money for some private kind of mandates where we were doing two things. So I was managing money for other people in crypto. I was basically selling vol because I was used to that and familiar with how to do that and how to delta hedge, let's say when you're selling like straddles on Bitcoin or whatever. And then I was also pair trading. And the pair trading I was doing on DYDX and Binance. I was like physically going in, opening a long, short, going to TradingView, charting that pair. I was then on a spreadsheet calculating my net funding situation and things like this. And it was just all a little bit cumbersome. And so after like 2-3 years of managing money and a background in kind of building and selling investment products for a bank, basically got the itch to build. And so we raised some money and that's how Pear Protocol was built. So the final thing I'll say kind of in my intro there is I'm eating my own dog food by building it. But I've been in crypto now for about years.
Yeah, that's amazing. And like your journey to Hyperliquid, I mean, obviously being in the trading space, you mentioned you used DYDX. Like at what point did you first use Hyperliquid?
Yeah, so I actually like faded Hyperliquid at first. And I kind of, if I have a message from being on this podcast, it's that it's not too late to make that pivot, right? That kind of mental pivot. So I didn't, I'll be really transparent. I didn't actually get much of Europe for all the kind of season 1 and season 2 that was ongoing. I came to Hyperliquid because I just wanted to test out doing some like TWAPs on chain. And that's what really kind of got me in. I wanted to TWAP into a personal long Bitcoin position. And I was impressed with the smoothness of that execution, the easiness with which I could on-ramp and put money into that and manage that position. And then it kind of hit me that it makes sense for Pear to really integrate with this thing. So Hyperliquid for myself, I came as a trader, and now I'm there as a builder. Just seeing the architecture that's being built out, it's really exciting.
Yeah, that's amazing. And I mean, I saw on Twitter that you have also joined the cult, which is Hypeo. I'm not sure if I want to call it a cult. That word has bad connotations, but how did you join the Hypeo community, and why?
Yeah, so I was at Token 2049 and fortunate enough to go to a couple of the Hyper Collective events that they had on, and I met some of the Hyper Collective guys, Noel and people, which is great, and the energy was just electric. It reminded me of Ethereum in 2017. It reminded me of Solana in 2021. You just had people, whether it was market makers, whether it was builders, whether it was users, who passionately could get into 2, 3, 4 hour debates about some aspect of Hyperliquid. And they don't necessarily all agree and sing from the same again is really healthy. And so I basically came back from that trip, and I just doubled down on Hyperliquid. So personally doubled down. The Pear treasury invested a large portion into Hyperliquid tokens to be strategically aligned and give those tokens back to our community over time. And then the final piece, which you talked about, getting a Hypeo, I just it's fun, right? to belong to something.
Yeah.
And so we're in a world, and sorry to get philosophical, but a world which is kind of losing community in many ways, whether it's the church or whether it's our families or whatever it might be. And so having these online communities where everyone kind of vibes and gels and has a common purpose of some kind, it's really refreshing. And so I went and bought one. I actually bought another one yesterday. They're cool. I like them.
Yeah. Hypeos are still very undervalued. But yeah, touching on that point around community, right? I think that it's sort of one of the key aspects of Hyperliquid. I know for myself, it's really the main reason why I actually came in, because I started on the Hyperliquid spot ecosystem, and then just trading through a Telegram bot, right? Hyper fun, and it was really the community that brought me back, besides making cash. But fast forward to where we are now. I mean, the builder community is insane. The energy is unmatched, the belief is there, and the conviction is there, right? Because no one's getting paid a grant or something, right?
Yeah, 100%. I would say the other thing about the community aspect is it's really organic. And obviously that's partly because this wealth effect got created, this generational wealth effect. And so what you have is people who are really kind of tech enthusiasts, and I would say I'm one of them. You have people who are enthusiasts of markets and how crypto markets trade, and I'd say to some extent I'm that too. And then you just have crypto, which is so beat in the doldrums, and communities just getting rugged or fighting with each other or whatever it is. It's really refreshing to find a group of people that coalesce around Hyperliquid and its vision. And I think the key thing here is vision, because if you see what's going on in Hyper EVM, if you see what's happening with builder codes and the likes, and even the regional communities like Hyperliquid UK, for example, I'm helping form that now. There's just a real energy and momentum behind it, and it kind of snowballs, right? You get involved in one piece and somebody says, can I introduce you to this guy? And then next thing you know, you're in another community, you buy an NFT, you get invited to a poker game. Next thing you know, you're going to a drinks event. Next thing you know, you're on a call with somebody about some tech thing. It just all kind of snowballs. And so I'd say within the space of not even 4 weeks since Token 2049, that community aspect has just really been felt on my side.
Yeah, and I mean, you guys, so currently you're built on Vertex and UIDX, correct?
A multitude of places. So our home currently is Arbitrum, and that means that we are executing people's pair trades through GMX, through Vertex, and then through an intent-based engine from SIM. So on the back end of that is a handful of market makers or solvers. So everything's been Arbitrum native thus far. And what's exciting for us is we can use the Builder code APIs to then route our orders through to Hypercore, to the Hyperliquid Perps order book, with the view of deploying our full platform logic. So when kind of write precompiles are there in particular, we can move everything, staking, we can move referrals, we can move all the execution, obviously, to Hyper EVM. And so I see it like a two-stage thing. Number one, route your execution through Builder code APIs, which is where we're at today. And then number two, which is fully deploy on Hyper EVM, which we're looking to do before the end of the year.
Yeah. Do you believe that Builder code volume over the next few years, right? So volume routed through Builder codes will eventually take over Hyperliquid volume itself?
So I was looking, I think Bisola, who's working for like SuperX, another kind of Hyperliquid thing, UK based. He's got some kind of chart, and it shows that the like volume is something, I don't know, 3-4% or whatever. I think you can get feasibly to a state where it's like 20-25%, and then Hyperliquid becomes like a liquidity venue, right? It's already getting there anyway. Like all the market makers, all the major market makers are present there and providing liquidity now onto the order book. And I think you get to an end state, which GMX wanted to do, Vertex wanted to do, etc., which is they wanted other people to build on top of their liquidity, right? But Hyperliquid really embraced that with Builder codes. And when I mean that, the skeptic will say, oh, well, you could always like build on top of Vertex or GMX. GMX is open source. You can just route your smart contracts through it. Or Vertex had an SDK. You could just route your orders through it. What's new with Builder codes? But what is new with Builder codes is all the incentives are getting aligned, right? So things like if we as Pear stake Hype, then we can pass on our trading discounts to the users that use Pear. And just little things like this that the team is constantly kind of shipping. I do think you can get to an end state where 20-25% of all volume is just through Builder codes.
Yeah, so let's chat more about the staking tiers, right? It was recently announced. Would you say for you as a builder and as a protocol that wants to use Builder codes, your incentive in that scenario is, okay, snap, I need to buy and stake as much Hype as possible so that I can lower fees for my own users, and in essence, that increases your own profit margins. Would that be correct?
Yeah, there's this model of build, stake, earn, repeat, right? That's the kind of loop that you want to get yourself into. And so it becomes virtuous because basically Hyperliquid are giving up some of their potential profit from this flow. But obviously they would never see it in the first place anyway, right? It's coming through PvP or it's coming through Pear or wherever it might be. And so for us, definitely like it creates incentives for us to buy as much Hype as possible, to stake as much Hype as possible. The only area of improvement I would say is that like the tiers can run away quite quickly, right? Like it's feasible for projects to own 10,000 Hype. It's feasible for projects to own 100 Hype. To get the higher tier becomes, as price goes up, it becomes more and more difficult. So I think if there's flexibility over time on that becomes a great thing. But even for now, yeah, the incentives are such that like as a builder, you want to get into that virtuous loop.
Yeah, 100%. And for Pear protocol, like making the shift, are you guys moving your entire basically flow onto Hyperliquid? Or are you still going to be using GMX?
So we're still going to be liquidity agnostic in the sense that if somebody wants to route their orders through GMX, they can do. If somebody wants to route their order through the intent-based engine, and I anticipate that more than 90% of our flow is going to go through Hyperliquid. And the reason why that's going to take place is because if you're an existing Hyperliquid user, all your volume still gets registered on Hyperliquid, right? So any kind of season 3 points or whatever is happening, if you're using Builder codes, you will still be rewarded by Hyperliquid for any volume that you do through Pear. So I think that's incentive number one, which is going to be hard to say, oh, come and do that on another venue, right? So I think Hyperliquid wins in that regard. The other thing is Hyperliquid is just going to be cheaper in terms of onward execution fees for most users. and a much more seamless execution environment. There's no kind of RFQs, there's no trading against a liquidity pool, there's no routing your order through an SDK. It's like build a code API, and it's pretty quick to get those trades up and running. And then finally, I'd say like we're going to have a system where the more you trade on the Pear engine, you'll earn these points, and we will be, like I said, giving back some of those hype tokens which we purchased. And so for a multitude of reasons, I think Hyperliquid becomes our preferred venue, so much so that it will be the default engine when you land on Pear protocol. And you won't have to choose where you're going to do your orders. Like by default, it will be Hyperliquid. And if somebody wants to, for whatever reason, route it through GMX or elsewhere, they'll still have the option to do so. But I intend 90% plus.
Yeah, 100%. So, you mentioned you've been in the markets for quite a while, and you've seen different perp dexes come and go. What do you think really set Hyperliquid apart? In your assessment of, wow, like they had like $9 billion open interest yesterday, and it does not seem like anything is slowing down. The Hyper EVM is just scaling. Builder codes is proliferating. I mean, do you think that this is just going to continue? Or where do you foresee maybe some issues that Hyperliquid will run into if, for example, you want to challenge like Binance level volume and sort of get to that stage?
Yeah, I have a tweet, right, which I never sent. I don't know why. It was like in my drafts, and it was an image of the FTX arena in Miami. And this was before, obviously, they took all the branding down. And the title of the thread was going to be "The Global Trading Arena is up for grabs." And essentially, if you rewind back to what was happening with FTX, in the fallout of that, you had Binance being investigated by the DOJ. You had real kind of issues, obviously post FTX, and a handful of other exchanges like having quite shady things like KuCoin and whatever. And then you had like DYDX experimenting with all this stuff with their V4 and whatever. And so we were in this like unique situation where the global trading arena, both on and off chain, was really up for grabs. So your question to me was, what did Hyperliquid do correct, in my opinion, which made them stand out? And I actually think the period that they nailed was the TG and how they went about and did the Genesis drop. Because at TG, what can happen to a lot of projects is whoever was there to farm this thing, they sell, they've made money, and they kind of run off. Hyperliquid did two things, in my opinion, really, really well at that point. Number one, they had this model of like the revenue share, right? And just buying back the token and supporting the token price. And I think that was really beneficial for narrative and sentiment around the ecosystem. And then the second thing, they just moved super fast with plans for Hyper EVM and everything else that they're looking to build out. And I think people really like caught onto this idea that they actually do want to be the house of all finance. And so more recently, when you see things like the Jelly Jelly incident, or you see like coordinated kind of campaigns tarnish Hyperliquid in some ways, it creates this like David versus Goliath thing. And obviously Hyperliquid is still David in many ways, but people can really get on board with that. I think it really realigns you with the original ethos of crypto and decentralization and Bitcoin, like this kind of alternative rails for payments and execution and all these kind of things. And after like years and years of people getting beat up by being in crypto, I think myself included, like people just want to align with that. And like Hyperliquid do stuff that sometimes is annoying to a builder like me. Like they for example don't have any like emission incentives for builders in terms of direct hype rewards, or they don't give any like preferential awareness of what's happening with Hyper EVM. They just release stuff and then like it's on you to figure it out. But actually, like once you get over your initial like, oh, it'd be really nice if they did this or gave me some hype, or if they gave me some like alpha on what's coming next. Once you get over that like hump, you just realize, shit, like these guys are for real. They actually really align with the ethos that everyone has an equal start in a meritocratic system to build the house of all finance. And I think if you're genuine and true and want to like build in this space, that's something to get on board with.
Yeah, totally. I actually I wrote a sort of long form Twitter post saying believe in something, right? And it was really based around this premise that like we haven't had this for a while, right? Yes, you had BTC, yes, you had ETH. Solana rose from the ashes, and yes, Solana was tarnished in some ways by what happened with FTX, but the whatever was left over, that community bought into the vision, and they literally built it from the ground up, and props to them. But I think, and that's why I'm in Hyperliquid, right? I align with the vision, I align with the ethos. I'm excited to build a protocol that's like completely bootstrapped with no funding, because I want to do what Hyperliquid did, right? And it's the greatest challenge, but at the same time, I believe it has the greatest payoff, right? And has the greatest reward. So I just think the whole community is rowing in the same direction. And it's a very stark difference to, sort of the season that Ethereum went through, where there was like infighting, like people didn't know what to do, and like there was no clear vision. But like here you have Jeff saying, okay, guys, we're doing this, then we're doing that. They release stuff and everyone knows exactly what direction to go into. So yeah, it makes a massive difference.
Yeah, for sure. It's everything that like, it really reminds me of that like Ethereum builder community pockets of 2017, pockets of 2021 that you'd see at like ETHCC events and things. And I was present at all of those, right? So like I have a direct parallel. And let's be honest, like having the financial incentives to be building on something which is clearly undervalued and clearly has asymmetric upside from here, like a 5x, for example, like that just accelerates your plans, because now you have double incentives. You've got incentives in terms of like the feel good, heartfelt, I want to build like cool shit in a decentralized, permissionless way. And then you've got the like financial incentives where developers who otherwise are looking to do stuff on AI, or they're looking elsewhere in other industries, they actually look and they're like, oh, okay, fine, these guys are for real.
Yeah, definitely. I mean, I started shelling hype on LinkedIn, which is notorious for TradFi bros.
Let's
and
go.
The first comment I got was like, why would I, like, what is hype? Like that's clearly a scam. Like, who calls something hype? And I was just like, I sort of just shook my head and I was like, okay, we are still very early. And if people are disregarding something because of its name, I mean, fair enough. There's a lot of scams probably that have the word hype in it. But at the same time, if you look beneath the the surface, you see that there's this fee generating monster that is just absolutely scaling like at an unprecedented rate. And then you have like Bloomberg and Galaxy and the rest of the big dogs starting to talk about it. What do you think about that, right? Where there's smoke, there's fire, and you see these big names starting to shill it. I mean, pretty sure these guys have bags already, right?
You mean the TradFi guys?
No, like Novogratz from Galaxy. I mean, he wouldn't be talking about it publicly if he, if he didn't already have big bags.
Yeah, for sure. Like people, so there's two things. Like number one, the kind of perception of Hyperliquid and the fact that its token is called Hype. I don't think in any medium to long term that has any impact. What really doing is when people express that view to you on somewhere like LinkedIn, is they're expressing what the other industries generally think of crypto, right? They literally think it's Bitcoin, there's an ETF, BlackRock are behind it, everything else is a scam. That's like the default TradFi mindset when it comes to crypto. So you're going to have to face that with any what it is. And I face this myself when I tell all my TradFi guys that I'm building like a pair trading platform in crypto. They're like, oh, it must be a scam. So then the second part is like who is allocating to hype, and clearly there's like a structural bid in terms of the assistance fund, and clearly there's like institutional interest in this, right? Crypto native institutional for sure, like Galaxy and people. But the idea of owning a piece of like on-chain Binance, or even like why call it on-chain Binance, just like owning a large portion of both the professional, retail, and like institutional flow in crypto, that's a really compelling investment argument.
Yeah. Nothing else quite matches it. But yeah, let's dive a little bit more into Pear protocols. So, I mean, I don't want to assume knowledge. So do you want to just give us a basic rundown of what you guys do, and then we can unpack it from there?
Yeah, for sure. So Pear, as in Pear, I'm kind of shilling the merch at the moment, is obviously a play on words on the idea of pair trading. And pair trading is where you're long one asset and short another at the same time, such that you are taking a view on the relative movements of these two assets. So a good example right now might be being long hype and short sol. So you're not necessarily exposed to whether hype goes up or down. As long as hype outperforms Solana on the way up or sideways down markets, as long as hype is doing better than Solana, you'll make money. And that's the premise behind pair trading. And so this is something which has happened for decades now in traditional equity markets, where people are long, let's say, Apple and they're short Meta, or within like the same sector, maybe long Nike and short Adidas. The concept of pair trading has been around forever. And so we're doing this for crypto, and we've built the first platform for you to do that. And so our initial deployment was on Arbitrum on the dexes on top of the dexes that you mentioned. We reached some kind of like product market fit there. So we've done close to 700 billion of volume. And for us, we're bringing that entire platform to Hyperliquid initially through builder codes. And so there's two types of kind of traders that would use. I saw some people ask this question, like, who is Pair Protocol for? Is it for savvy investors that know how to do statistical and correlation analysis between two assets, or is it for your retail guy that wants to trade Pepe versus Bonk or Pepe versus SHIB? It's both. And so I'd say like the majority of the volume that we see on Pair and that we anticipate to see on Pair is going to be narrative-based trading. So it's going to be people coming and being long hype and short ETH, or long hype, short Sol. And those are just sleeper positions. You can put them on and you can sit on them for like 3 to 6 months and feel confident that you're going to make money with relatively lower volatility than being outright long or short, especially like even compared to having a spot position, you'll have much less volatility in most pair trades. The second type of person that would use pair trading is someone who is a bit more of a professional retail kind of guy. They understand the idea of being somewhat pseudo market neutral, neutralizing their market risk. They might look at the correlation between two assets. They might be doing some statistical arbitrage of some kind. We have an entire community of traders that kind of educate one another on this in both Discord, Telegram things. And that also the platform caters for them. So they can do things like limit orders into trades. They can TWAP into a pair trade. They can set a TP and SL on the ratio itself rather than on individual legs. They can monitor their net funding and all of this kind of stuff. So in a nutshell, Pair Protocol is the of trading, and that is for anyone that wants to like get into these relative value trades with leverage.
Yeah, that's amazing. And you said you guys have done $700 billion of volume.
Million with an M, sorry.
700 million. Okay, so I just foreshadowing what's to come post.
Dude, let's go.
Deployment.
700 Bs is good.
Yeah, no, that would be pretty wild. And like unique users, like what's the user base like? How many users do you guys have? And typically, where do you see most of your traders coming from?
Yeah, for sure. So lifetime, we've had about 5,000 unique users come to the protocol. And on any given day, there's like, it really varies, but between like 0 and 100, right? On any given day. And that kind of user base is spread out all over the world. I'd say it's still mostly been retail and professional retail users using this. But up until now, I would say our kind of concept has been like a 10 out of 10 concept, which is pair trading and doing it in crypto. It makes total sense as long as you can get over like the initial kind of education hump of why you'd want to pair trade. The reality is our product has probably been up until now like a 5 or 6 out of 10 product. And that's because we've had relatively clunky architecture. So either we've faced like GMX in isolated pools, or you've been executing through an SDK with Vertex, or you've had this intent-based framework where you send an intent to a solver and fills you on both legs, and then there's like just lags in execution, and then obviously costs as well because the engine provider and the solver need to get paid as well as Pair. And so for us, moving to Hyperliquid really moves the needle from it being like a 5, 6 out of 10 product in my mind to like a 9, 10 out of 10 product. for us, really kind of the focus, which is the retail users who use it now to give them a much better experience. But really excited to also be talking to Hyperliquid users who are familiar with Hyperliquid, know how to trade on the Hyperliquid order book, and they see unique benefits to using Pear. And I can reel off like why you'd want to do your trading on Pear as to doing it directly on Hyperliquid. But ultimately, like our product needs to be so good that somebody thinks, I can't do this myself, or I don't want to do this myself. I'll pay a small fee and do it through Pear because I get a myriad of benefits from doing so.
Yeah, 100%. And in terms of like interfaces, right? What's your opinion on this sort of growing trend about, if you own the interface, you own the user, and what's your thoughts on like mobile versus desktop trading? Like I mentioned earlier, I personally am a big fan of Telegram bots, and that's my preference. And I would prefer to trade anything through a Telegram bot, just because it's clean and it's quick and it's I just like it. But what's your opinion on that trend and sort of where most flows are going to come from moving forward?
Yeah, so right now we have like a pretty bias towards desktop users. It's like 75-25. I think part of that is just because of like wallet infra, like you need to connect to wallet and sign transactions and all of this kind of stuff. And people prefer to do that generally from a desktop, which we found for something like pair trading, where they're executing maybe less frequently, but like bigger size. And so we've seen this like 75-25 split, but the mobile adoption is increasing over time. And I think that's a trend to be aware of. So for us, like we definitely want to, I wouldn't say we're mobile first, but we definitely need to create an experience for users, whether it's through Telegram bots, whether it's through like other means, where the mobile channel is kind of just as good as executing on desktop. Our users themselves, they're based all over the world. And obviously, like most people use a VPN of some kind. So it's hard to get any analysis on where they're based. But in terms of like who those users are, because I've met them, they're just like genuine people who have been around crypto and they're crypto curious. They want to trade. And like, frankly, a lot of people have come up to me at events where I've been there and they've just said, dude, like I make so much more money now pair trading with so much less stress. Because I think one of the challenges over the past few years for users has been like trading perps and just getting blown out in choppy conditions. And pair trading really like works in all those market scenarios. And so for us, like getting more of those users is really a key part of our messaging.
Yeah, makes sense. And what do you think takes Pear protocol from where it is now to like the next level, right? If you had to 10x everything, do you think it's just being on Hyperliquid? Maybe that's the magic sauce, or what do you think takes your product from where it is now to 10x?
Yeah, I think if I look at Hyperliquid success, part of the reason why Hyperliquid is so successful is they built a great product and their users got rich. And for us, we are in the process of building a great product. I'd say we're like maybe a week or two out as of 22nd of May. Now we need our users to get rich. And I think we need to tell that story very well. So I'll phrase what a market maker said to me who currently provides liquidity to Pear. He said, of all the sexes and dexes where he provides liquidity, Pear is the only one where the users net make money. And I really think that Pear needs to double down on this message that you can enter these pair trades and be net profitable with much less vol and still be riding the tide of like, oh, I'm long hype, right? Like hype's at 31, great. I made money today on my hype sol. Or the market goes down and hype's down like 5% and sol's down 8%. Like you still made 3% today, right? I think that story that our users are making money and getting rich from this is a really powerful story to tell, and we just need to tell it much better. Yeah,
that makes sense. I know that the Pear ticker was at some point bought on Hyperliquid, and that was not you guys, correct?
Correct. So some like industrial ticker had bought a whole bunch of tickers. One of them on Hypercall was the Pear ticker. We did inquire about, because it ended up being a rug, of course, we did inquire about potentially buying all the liquidity or all the kind of supply of that thing and then owning that. The problem is we wouldn't own the deployer address. And so you end up in a situation where they could just mint more or whatever it might be. However, having said that, what I will kind of spill as a little bit of alpha is right now Pear has a token on Arbitrum. I think over time, it would make sense if we're going to be like fully aligned with Hyperliquid for us to have token which is on the order book and on Hyper EVM. And so I won't say much more than that, but that is definitely in our plans before the end of the year.
Bullish. And like, is there anything new that users can look forward to, and some like new features that you can maybe spill some alpha on?
Yeah, for sure. So one of the things, like when you pair trade, you want to find correlated assets, right? So let's say you're trading Bitcoin versus SUI. You're long Bitcoin, you're short SUI. Now, by default on Pair currently, we have like dollar neutral trades where you're 50, let's say like you do $100 trade, you're $50 long Bitcoin and $50 short SUI. So when you execute that trade on Pair, we're like atomically executing those with exactly the same timestamp. So there's no like execution lag. With the new Hyperliquid integration, we'll have custom weightings. So you will be able to be, for example, like 60% long Bitcoin, 40% short SUI, which makes total sense because when the market goes up, you need that exposure to Bitcoin to kind of compensate for the level of volatility and returns that you can otherwise get to the upside. And the same on the downside as well. So like SUI only has much more down beta than Bitcoin on down days. And so you don't need to be like 50-50 allocated. So custom weightings is going to be a large part of that. For us, having all the kind of analytics and data to inform people of what the custom weightings could be is also going to be part of our future rollout. One thing I'm particularly excited about is having limit orders to open a trade. So if you think about someone who's doing like LPing Pepe ETH on Uniswap V3, for example, in concentrated liquidity, there's a world in which, and I can provide examples later, in which you can use pair trading to hedge some of your impermanent loss. And so we'll have the ability for you to enter like a Pepe ETH trade, a ratio trade at a certain limit, which can start to hedge your impermanent loss on your LP position. So there's an interesting feature there, which we'll be going live with. Our take profit stop loss bot. So basically, if you're entering a pair trade, like let's say Pepe ETH or HypeSol or whatever, you can set a take profit and stop loss on the ratio. We have a bot that less than every second scans the relative price of both assets and will close both legs if your TP or SL is closed. That addresses a big issue about path dependence, because if you're pair trading yourself on Hyperliquid right now, you can't necessarily know where to put your limit orders on each individual leg, right? You have this path dependency. There's multiple ways that Hype Sol could double from here. It's not just a case that Hype doubles and Sol stays the same. It could also be the case that Hype stays the same and Sol like halves or whatever. So we have a bot and a script that, based on the user's TP and SL, dynamically scans those positions. So that's something which is a lot more robust, together with the notifications of that. And then the final piece, which I'm really excited about, is I stayed away from the points meta forever for like 2 years. And we have decided to like reintroduce that, but in a much more transparent way. So if you trade on Pair and your volume is genuine volume, and you're, or whether you're losing money, it doesn't really matter. You'll accumulate these kind of points, and those points will directly translate to a number of Hype tokens. And so when I said Pair has converted a large percentage of its treasury to Hype tokens, they're currently staked with Hyperco and Nansen in their kind of validator node. We can unstake those, and together with the launch, we'll be distributing Hype tokens. So I think from like a user's perspective, you have all these kind of features: charting, take profit, stop loss, limit orders. You've got custom weightings. You've got the potential to farm Hype tokens in a way. I think they're all like exciting features that are coming up. We then have something 2 weeks after our launch, which I can't say too much about, but essentially we'll have a specialized agent just on Hyperliquid for pair trading. And so that agent will be scanning for statistical arbitrage opportunities, z-scores, betas, correlations, mean reversion, co-integration, and things. That means nothing to most people, but to the people that it means something to, essentially agent pair will give you like signals on which pair trades to enter. And that's going to be really helpful for people who turn up to pair and they're like, I know I want to be long hype, but I don't know what to short against it. Or I know I want to be long Bitcoin, but I don't know what to short against it. Hopefully agent pair can give some insights there.
Yeah, that's really amazing. And I'll definitely be a user of that. Cool. So I guess, one more question on that. Are you guys going to be integrating non-crypto assets? So like equities, indices, things along those lines? As you know, Unit Protocol is probably going to tokenize most tradable assets onto Hyperliquid. So what are your thoughts on that?
Absolutely. Like this is the much bigger opportunity, right? It's like pair trading in crypto is this thing which like makes total sense at times, right? You want to be long like Bitcoin and short a whole bunch of other things. The idea that you can open up the world to whether it's commodities, whether it's equities, etc., you just open your eyes up to a much bigger audience. And so like I know, for example, a handful of TradFis that at any given time, they have like strong views on relative value trades. If the liquidity is there on Hypercore, of course, whether it's spot or perps, of course, Pear can just facilitate those trades, right? And so I think that becomes like a huge unlock, and HIP3 and all this kind of stuff is moving in the right direction for permissionless perp markets, including equities and commodities and things.
Yeah, that's bullish. I think you're correct. Like the world is still so much bigger. I mean, equities trading, indices trading, bond trading, is still orders of magnitude bigger, right, than cryptos. So I think there's still a lot of assets to suck in. So typically we end off our podcasts with some bull posting. So if you can give us a price prediction based on some moon math on where you think hype goes to by the end of this year, so end of 2025, and then zooming out a little bit, how big do you think the market is that hype can capture, and how high do you think the price could go?
Yeah, so I think Hyperliquid, based on its current product offering, which is essentially like Hypercore plus builder codes plus a little bit of nascent stuff on Hyper EVM, I'd attribute like a $75 target to that. I think if they can get Hyper EVM to launch with like landmark apps that people genuinely use, and I really think Pear Protocol top 3 there, that somebody like Jeff can stand up and be like, yes, on Hyper EVM we have like all these interesting DeFi apps built on top of us. Then you get into like the $100 plus kind of range. So for me, I would definitely say I would anchor my kind of prediction at 75 with like a call option taking us to 100.
Amazing. And over the next few years, do you think it's dependent on those like blue chip type mainstream applications being built, or do you think just naturally, if it continues on its current trajectory, it'll get there?
Yeah, I think like one thing that's always surprised me a little bit is the degree of inertia, right? Like there's not that many reasons now for you to want to trade on Binance or Bybit, whether it's like legally or whether it's hacks that have taken place or whatever, versus trading on Hyperliquid, right? And I'm still somewhat surprised at the degree of inertia by some people to trade on these centralized exchanges. And I do think it's like just partly, I've always traded there. I've had an okay experience. I've made money. I'm just going to keep like 20 mil parked on Binance and trade there. And I think that will still be an interesting, like that dynamic in the market will still always play out. But I think the builder code APIs, and we start there where different people are seeing Hypercore as kind of a liquidity hub to build on top of. And then Hyper EVM, which becomes this house of all finance. That over like a medium term time frame, let's say 5 years, that's a really exciting and compelling argument. And I'm really kind of aligned with this idea of like house of all finance being there. I think if I look back to the TradFi world that I came from, it just makes sense. Forget the moniker of DeFi. It just makes sense that financial transactions take place on chain. It's 24/7. It's transparent. It's immutable. Like, there's just so many reasons, right? You remove a layer of legal teams, risk teams, credit teams, all of this kind of stuff. And if Hyperliquid can be the go-to place for that, then I think we have a very interesting future ahead.
Yeah, so there we have it. So thanks, Huff, for joining us today. It's been a pleasure. And I'm excited for you guys to launch on Hyperliquid. I think it's going to be a massive unlock, and I'm excited to be a user, knowing that I'm farming my Hype airdrop at the same time. So thanks for joining.
We've got to get some vaults going on Hyperbeat and stuff like that.
Yeah, we'll be cooking. We've got a lot of stuff going on, but I'm excited to work with you guys.
For sure, dude. Well, thanks for having me, and it was a pleasure to connect.
Awesome. Thanks, Ed. Cheers.
Thank you.